This is Barry Zalma speaking for Claim School Incorporated's newsletter, Zalma's Insurance Fraud Letter for June 15, 2024. Since June 15 falls on a Saturday, this video and blog goes out on the 14th. This volume 28, number 12 of Zalma's Insurance Fraud Letter is the source for the insurance fraud professional and continues its 28th year of publication dedicated to those involved in reducing the effect of insurance fraud. ZIFL is published 24 times a year by Claim School and is written by me. It is provided free to anyone who visits the site on the blog. The issue contains the following articles. First, an arson-for-profit scheme that failed because an owner of the business set the fire, and the innocent Co-Insureds found they had no rights to the proceeds when the fraud was committed on their behalf. Plaintiffs Timeless Bar, Inc. and Horseshoe Club, LLC sued their insurer, Illinois Casualty Company, claiming the latter breached the parties' insurance agreement. Specifically, the plaintiffs alleged that even though the fire that destroyed their property was intentionally set by an officer of the corporation and a member of the LLC, the insurer was obligated under the policy in Minnesota law to pay for the loss. The United States District Court for the District of Minnesota on May 21, 2024 found in the case Timeless Bar versus Illinois Casualty, in a lengthy opinion, resolved the issue of who was responsible for the fraud, and it was everyone who would have benefited from the loss. You can read the full article in all 18 pages of this issue of ZIFL at the link provided in the blog. Then there's an article on more of McClenny, Moseley Associates issue, with this being ZIFL's 29th installment of the saga of McClenny, Moseley Associates and its problems with the federal courts in the state of Louisiana and what appears to be an effort to profit from what some magistrate and district judges indicate may be criminal conduct to profit from insurance claims relating to hurricane damage to the public of the state of Louisiana, and the request by the Federal Bureau of Investigation for information about a potential crime by MMA to the public. Next is an article on litigation funding and financing, which is now belatedly on the verge of regulation. Third-party litigation financing has become a controversial issue in the U.S. court system over the past decade. Litigation financing has a history dating back to medieval England. The practice was once prohibited by doctrines in common law known as champerty or maintenance, which barred strangers to a lawsuit from providing funding in exchange for a financial interest in the outcome of the case. James Whittle, Vice President and Counsel for the Washington-based American Property Casualty Insurance Association, said third-party litigation funding as we know it began roughly 30 years ago in Australia before moving to other countries that practice common law such as the U.S. and the United Kingdom. You can read the full article and all 18 pages of this issue of Zalma's Insurance Fraud Letter at the link provided. Then there's an article about how a Bloods gang member took over the fire restoration industry in New York and was eventually caught, arrested, tried, and now sentenced to 12 years in the federal penitentiary. Jatek Smith, a gang leader who recruited other gang members and used violence, threats of violence, and extortion to take over the fire restoration business in New York City and defraud insurance companies, was sentenced recently to 12 years in prison. Smith was sentenced by U.S. District Judge Jed S. Rakoff after being convicted following a bench trial in December of 2023 of racketeering and extortion conspiracies. In addition to the prison term, Smith of Staten Island, New York, was sentenced to 3 years of supervised release and ordered to forfeit $354,546.44. Restitution amounts will be set at a later date. You can read the full article and all 18 pages of ZIFL at the link provided. Then there's an article about a RICO suit against chiropractors where Allstate insurance companies effectively alleged RICO conspiracy in a case called Allstate Insurance versus Lint Chiropractic. The U.S. District Court for the Eastern District of Michigan allowed the RICO case against multiple chiropractors and conspiracies to defraud Allstate to go forward to trial. Next is a list of health insurance fraud convictions, starting with the story of a pharmacy owner who was sentenced to 2 years in prison for a $1 million health care fraud scheme. Paul Mansour, 56, of Sierra Madre, California, was a pharmacist who owned Mansour Partners, Inc., doing business as Best Buy Drugs, and was sentenced to 2 years in prison for submitting more than $1 million in false and fraudulent claims to Medicare for prescription drugs that were never dispensed to their beneficiaries. You can read the full article at the link provided in the blog. Then we find true chutzpah from a convicted dentist who was sentenced to 20 years in prison for Medicaid fraud, yet demanded return of his license to practice dentistry. The Board of Dental Examiners revoked Seth Lookhart's dental license after he was convicted of dozens of crimes perpetrated in furtherance of a fraudulent scheme of staggering proportions that jeopardized the health and safety of his patients. Lookhart appealed to the board revocation of his license, arguing that his punishment was inconsistent with past board decisions. On appeal, the Superior Court concluded that the board properly exercised its discretion by revoking Lookhart's dental license, who managed to pull teeth of some of his patients while balancing on a hoverboard. So the decision will protect his fellow prisoners from his detailed and less than competent dental work. Then there's convictions for crimes other than health insurance fraud, starting with a person who received 10 years in prison for leading one of the largest no-fault insurance frauds in New York history. Bradley Pierre was sentenced to 10 years in prison by U.S. District Judge for conspiracy to commit bribery and conspiracy to defraud the Internal Revenue Service in connection with his orchestration of $60 million fraud targeting no-fault automobile insurance companies. Pierre pled guilty before the judge on December 18, 2023. You can read the full article and multiple other convictions at the link provided in the blog. And then there's an article called Insurance Fraud is Epidemic, where we explain how insurance fraud continually takes more money each year than it did the last from the insurance buying public. There is no certain number Since most attempts at insurance fraud succeed, estimates of the extent of insurance fraud in the United States range from $87 billion to more than $300 billion every year, and those are probably low. Insurers and government-backed pseudo-insurers can only estimate the extent they lose to fraudulent claims. Lack of sufficient investigation and prosecution of insurance criminals is endemic, and most insurance fraud criminals go undetected. Those that are detected do so because they became greedy, sloppy, and unprofessional, so that the attempted fraud becomes so obvious that it cannot be ignored. That article was adapted from my book, Insurance Fraud, 2nd edition, Volume 1, which is available at Amazon.com as a Kindle book, a hardcover, or a paperback. This video was adapted from my blog, Zalma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog. You can subscribe and will receive notice of every blog posting, usually 5, sometimes 6 a week, and of the publication of Zalma's Insurance Fraud Letter twice a month. Please tell your friends and colleagues about this blog and about Zalma's Insurance Fraud Letter so that they too can subscribe. And if you're interested in further detail about insurance, insurance claims, insurance fraud, and insurance law, please consider for a small fee subscribing to my Substack publication. Thank you for your attention.